All right, guys. Good morning. Good morning. So pretty much today, we're gonna go over how to qualify a buyer. So for those who has never worked with a buyer or have worked with a buyer, you have to understand that every time you sit down with a lender and with the buyer, is always gonna be the same questions, right? So whenever you meet someone at a restaurant, at a business, over the phone, you get like a referral over the phone and you don't know what questions to ask. These are exactly the same questions that every lender is going to ask a buyer. So these are pretty much the same questions that you should ask as a realtor. Okay. So pretty much what I'm going to do with Francisco today. Does anyone want to I'm going to role play with Francisco. What does anyone want us to role play? Like if we already have the buyer into the office in front of Francisco, or do you guys want us to role play like if we just got the buyer from a referral and they gave us a call and we're interacting with the buyer? Which one do you guys would prefer? Because at the end of the day, it's almost the same. It's just a different conversation, whether it's through the phone or in front of person. But obviously, same questions, just different scenarios.
Do both.
Do
And
both.
guys, these questions, and these questions are going to give you already a very generic, broad idea of exactly what kind of client you're dealing with, where the client stands, and ultimately, it's going to be exactly what today's morning call is about. It's how to avoid problems in a buyer's financing. Because if you ask these questions correctly, this is basically a verbal DU approval. Obviously, there's an old saying that goes, buyers are liars. So sometimes it might work, sometimes it might not, but it's going to give us a very good generic idea of what kind of a prospect we're dealing with.
All right. Well, Frank, so let's just say right now, we're in the office right now. I just got here with my realtor and I'm the buyer. So we're gonna go ahead and role play. So you guys ready?
Let's do it. Hey, Marvin, it's an absolute pleasure to meet you. How's it going? Good morning. Happy Wednesday.
Hey Frank, good morning. Thank you so much for having me.
How's your day going today, my friend?
Everything good, brother. How about yourself?
Doing good,
I
man.
like,
Heart's
I, like,
beating,
I like
mind's
that. I
beating.
like that money. I like the money tree plant right there next to you.
Thank you. Gets a little bit of water every single day.
Yeah. Love it.
Talk to you, my friend. How can I best be of service to you?
Hey Frank, so I just got referred, next thanks to my agent next to me. I was referred to her, and she brought me over to you. So so it's pretty much my first time purchasing a house. So honestly, I don't really know the process of buying a house. I mean, first time. So you're leading a blind man.
Excellent. That's why you're here. You're in the right place, and I'm here to be of service. And so, who's going to be purchasing this home? Is it just yourself and your wife? Is it for your family?
It's just gonna be me.
Okay. So it's just going to be you applying for the financing as well, correct?
Correct, just myself. Yes.
Okay, Marvin. I'm going to ask you some questions just about yourself, just to see more or less where we stand. Are you currently employed or self-employed?
I'm actually self-employed right now at the moment.
Excellent. So you're an entrepreneur. I love it. Okay. And what line of work are you in, Marvin?
I own an inspection company.
Okay. Amazing. How long have you had that inspection company open for?
About 4 years.
4 years? That's amazing. Guys, so let me stop right there. What's the most important thing we're looking for? A 2-year employment history. So already right there, we already know. All right, he's been in the same line of work for 4 years consistently. The company's been open for 4 years. That marks off a check right there. Okay, 4 years. Excellent, Marvin. Have you done your 2023 taxes yet?
I have, yes. I've done my 2022 and 2023, correct, yes.
Beautiful. Sounds good. How's your credit more or less, Marvin?
I think it's good. It's pretty good. I think it's good.
Good. Anytime you checked any bank app, Credit Karma Experian, was it in the 600s, 700s?
It's like in the 580s, 590s.
Beautiful. So we can help you get that up for sure. Marvin, talk to me a little bit about what are your monthly debts? Car payments, credit cards, student loans, personal loans.
I have no student loans. I do have a few a few automobiles under my name. I have two automobiles. I have like 3 credit cards.
And let me ask you something. Do you pay those cars out of your personal account, or does your inspection company pay them out of the business account?
So we pay them through the business account.
Perfect, beautiful. So guys, this is more of a lender thing now. So now that's more like a a green flag for me, and I have to check that those vehicles are expensed on the corporate returns. So that way I know I won't have to count it against what's called the debt to income ratios. Okay, so you pay out of a business account, that's amazing. So that's all we have, just a couple credit cards, um, and just a couple car payments, correct?
That's correct, yes.
Okay, Marvin, this is the most important thing here is let's talk about a comfortable monthly payment. So obviously, you know, the market's a little bit expensive in Miami. So we need to be realistic, but we also don't want to be just, you know, paying our month to month. Surviving month to month just to pay a mortgage. So what's a comfortable monthly payment for you and your family that already includes everything? Principal, interest, taxes, insurance. Everything that's all in it's comfortable for you.
Is that including like Wi-Fi and light bill or?
No, just the housing expense, just for the house. No
Oh,
light
okay.
bill, no water, no utilities, just principal, interest, taxes, and insurance.
Okay, so I would say about roughly 3,500.
3,500. Okay, so just so you have a rough idea, 3,500 is going to give you more or less a loan amount of around $430,000. Okay. Do you know how much is required for a down payment as a first-time home buyer?
No, I don't.
Okay, so as a first-time home buyer, we're going to be applying most likely with a 580 to 590 credit score for what's called an FHA loan. An FHA loan is backed by HUD. It's called the Department of Housing and Urban Development. FHA stands for Federal Housing Administration.
Is that the first time home buyer program that everyone speaks about?
Yes, that's the first-time home buyer program that everybody speaks about, with just 3.5% down. So your minimum down payment is just 3.5% down, but then you have your closing costs. Do you know what your closing costs include?
No, I have no idea.
Okay, so we have a title company. I'm gonna explain to you what that title company does. That title company is gonna do a lien search. So they're gonna do a lien search on the title of your home to make sure that there's no open permits, open violations, there's no liens, there's no judgments, that the title of your house is clean. They're also gonna do a survey. That survey is gonna measure your property to make sure that no neighbor is intruding your property or the coordinates of your property with, like, let's say, a fence, a tree, or anything of such. That title company is also gonna have two title insurances that are paid one time at closing. Okay, what are those two title insurances? I'm going to explain to you. Let's say, for example, you're building a pool in my house. Okay, and I don't pay you for that pool, but I'm already selling my house. I'm under contract, and I'm selling it to George, and we're closing next week. And you don't know that while I'm selling the house, so you're going to go and you're going to put a judgment against the title of my house, right? Now, next week, I close on my house, but George is already the new owner. So if George is already the new owner, that judgment is going to reflect when the title's already under his name. So those two title insurances are going to protect you against anything that could appear on title that when you're the owner of the house that could have appeared from previous instances. Okay, you're also going to pay your first year's homeowner's insurance at closing. Your first year's homeowner's insurance is considered also closing costs. And then you have what's called your escrow account. You know what your escrow account includes?
No idea. I don't
Okay,
even
so
know
your
what escrow
escrow,
means.
okay, so your escrow account is what holds your monthly taxes and your monthly insurances. So remember
Okay.
what I explained to you, when you pay your monthly payment, you're paying principal, interest, taxes, and insurance. So your monthly taxes and insurance are collected in what's called this escrow account. So it's going to collect more or less around 3 months to 6 months of taxes and 3 months to 6 months of insurance. Now you may ask, why am I collecting insurance if I already paid it at closing? Because the insurance that's in your escrow account is already for the following year. So that way you don't have to pay at the end of every single year. So your escrow account is going to collect your taxes and your insurance depending on the time of year. It's going to collect 3, 6, 9, or 12 months of taxes and insurances. So that's what your escrow account includes. Okay,
Okay.
so we talked about what your title company does. We talked about your first year's insurance policy. We talked about your escrow account. Now we also have your government recording fees, what the city charges to record the title and the deed under your name. And then we also have your bank fees. So depending on what lender you work with, for example, here at Columbus Capital, we have a very standard cost. It's just 1,915. And then if the buyer has the option to buy down the rate, they can purchase discount points so they can buy down the rate to a lower rate. So
Okay.
all of that, Marvin, remember you have your 3.5% down payment plus your closing costs. So it's more or less around 8.5% of the total purchase price of your home. So you mentioned more or less that you're comfortable paying around 3,500 a month. So
Okay.
3,500 a month, let's say gets you a house of 450 times 8.5%. You're gonna need around anywhere from 36 to $40,000 for the purchase of your first home.
Oh, wow. I wasn't expecting that.
How much were you expecting? What's something that's comfortable for you?
I don't know. I have like $15,000-$20,000 saved.
Okay, so there's many programs available today, like the Florida Hometown Heroes. Have you ever heard about Hometown Heroes, Marvin?
I think I've seen it in the news somewhere, Instagram and TikTok somewhere.
Okay, so Hometown Heroes is an amazing program, but we have to move with a lot of urgency because there's only about $30 million left in the program. So let me explain to you what that program is. That program is going to assist you with 5% of your loan amount, not your purchase price, of your loan amount towards down payment and closing cost assistance. Okay, so we definitely need to see how we fix your credit, whether through a rapid rescore or settling some debts. So because the Hometown Heroes requires you to have a minimum 640 credit score. Okay, you need to be a first-time home buyer, so you obviously qualify in that aspect. And you need to be a full-time employee in the state of Florida, which you are because you own your inspection company. Okay, so the Florida Hometown Heroes is a non-forgivable second loan. What does that mean, Marvin? A non-forgivable second loan means that you have to pay it back at some point. Okay, but
Okay.
it's interest-free. The good news is you don't have to make monthly payments on it. So at the time of refinancing or selling your home, you're gonna have to pay off that second loan. So the good news is when you refinance your house, okay, you're gonna refinance your house to lower your rate when rates come down. When rates come down, equity is gonna rise. So you're gonna have equity in that house. So when you have equity in that house, you can combine the Hometown Heroes second loan with your first mortgage and combine it all together in the refinance. So you don't come out of pocket not a single penny. Doesn't that sound good?
Yeah, sounds better and way better for sure. 100%.
Okay.
Something I can definitely deal with.
Okay, so if you're looking at a purchase price of 450, you're gonna finance 96.5% because you're putting down 3.5% down. So your loan amount would be 434,250. So 434,250 times 5%, you're talking about 21,712. So obviously every property is gonna have different taxes and different insurances. So let's just subtract 21,712 minus $37,000. You can now be in a property which is $15,287. Is that worth
Okay,
it
yeah,
for you?
that's way better. That's what I was where that's what I was looking for.
It's amazing. So Marvin, I know it's just the first time we're meeting. It's an absolute pleasure, and I'm glad I could be of help to you. So what we're gonna do is I'm gonna give you a needs list of documents, okay? And
Okay.
and let's schedule a meeting later today in my office, maybe tomorrow, so you can bring those documents and I'm gonna print off for you. And then once we meet those documents and we
What
meet
what
here
what
again.
what what documents are those?
So for a self-employed borrower like you, Marvin, we're gonna need your driver's license. If you're a citizen, we don't need anything. If you're a permanent resident, we need your permanent resident card. If you have a work permit, I'm gonna need the work permit card, the EAD card. Okay, so
Okay.
are you a resident, citizen, or do you have a work permit?
Okay. No, I'm a citizen.
Okay, beautiful. So I'm gonna need your last 2 years personal and business tax returns. Your last 2 years personal and business tax returns, all pages. Okay, especially the K1s. Okay, and I'm gonna need your last 2 months bank statements, personal and business. Your last two
What
months
do you
bank
what
statements.
do you what do you what are you checking for my bank statement? Sorry to ask you, Frank.
No, no, absolutely. So what we're gonna need in your bank statements is we're gonna need to see how your money's being sourced. So we're gonna check for unusual large deposits. We're gonna see if there's any child support alimony being paid out of any debt, if there's any personal loan being paid out, just any debt that doesn't appear in your credit report that appears to be a monthly obligation or liability. We're gonna check there. Also, if there's any large deposits that are more than 50% of your monthly income. So we have to calculate your income that's on your personal and business or corporate returns. And if there's any large deposits that are 50% of your monthly income, we're gonna need to source that income. So maybe if you did a very large inspection on a Coco Plum mansion and you charged $7,000, $8,000, or maybe $10,000, and your monthly income is just $12,000, that's more than 50%. So we're just gonna need to provide an invoice to the underwriter to be able to justify that large deposit.
Okay, perfect. Sounds good.
Okay, so once we have that needs list of documents, let's see if we meet up in my office later today. And you know that we also work Saturdays and Sundays at all times a day. So we can meet here in my office and then we can complete your pre-approval. So your amazing realtor here can go ahead and take you house hunting. And if there's any property you see that you're interested in, just send it in our group chat so that we can run proper figures with your monthly payment and your cash to close scenarios.
Beautiful. Thank you, Frank. Hey, thank you for your time, brother. Thank you, man.
Absolutely. Do you have any other questions, doubts, or concerns for me?
No, that'll be all. Let me see if my realtor has any questions. So does any realtors have any questions here?
Hi, good morning. Yes, me, of course, Dagmara.
Dagmara, ¿cómo estamos? Good
Good
morning.
morning.
I was saying good morning, and then I realized my thing was muted. Question, but these are not questions that we should be asking our buyer,
No.
but we should get a feel for it.
No, I'm gonna ask now. I'm gonna role play now with you now that you're here, and then I'm gonna be the realtor. Yes. So I just wanted to go into details, okay? Heidi, you can go ahead and ask a question as soon as I'm done here. So pretty much any lender that you sit with, they're gonna ask you the same exact questions, right? So you wanna have the knowledge of what a lender's gonna ask the question, because having more knowledge, you're gonna be a better asset to your client. You're gonna know what questions to ask them. So when they tell you, "Oh, I'm self-employed," you're like, "Oh, look, how long you been working there?" Now you know that if they filed the last 2 years, because most self-employed clients, either they don't file the last 2 years, or they file very low, for not to avoid paying taxes. So you couldn't start already developing the lender mindset, because the more you know, the better it is, right? So let's
Right.
just say I'm gonna start role. Heidi, you had a question there, and I'm gonna role play with someone now, like exactly the way I pretty much when I get a
Hi.
client and
Yes, really quick. Good morning, guys.
morning.
So I'm dealing with something really quick, and it's pretty much what you guys were talking about. Because this client, he told me that he had 30,000 saved for the closing costs and everything, but he didn't mention it that he had the money cash. So
I
just
was just gonna say that. I didn't have no money, but good. That was a good question.
yeah,
That's
I
actually a
want to
great,
know how to help him put in the money in the bank account without looking suspicious, or that he just suddenly put the money and it
so
appears
that's
there.
a great question, guys. I'm glad that Heidi said that. Heidi, can you repeat that again so everybody can hear you?
Yes, guy. Well, what the situation that I'm in right now is that my client has the money. He has 30K in cash. So yeah, of course, we want to use that money for the deposit and the down payment and everything. But not deposit, the closing cost. But I don't know how to help him put in that money in the bank account. So what
Okay,
he
Heidi,
what he should do right now.
Heidi, let me ask you something. Are you in the contract already?
No, we're not on the contract. We just recently did the approval letter. He's already approved, and now we're hunting for houses. But I know at some point when we get in negotiations, we're gonna have to deal with the money, and he doesn't have it in the bank account. So at this point,
Okay, let me ask you, what did your loan officer advise you?
he said that he can find someone he trusts, and that person could give him the money as a gift.
Okay, yes, so there's two things you could do. Is your buyer employed or self-employed?
He's employed.
Okay, so if he's employed, it's very hard to go depositing that money in
Mm-hmm.
cash little by little, because what's the guideline? Guideline is one single deposit cannot be more than 50% of your monthly income. That's for FHA and conventional loans. But since he's a W-2 employee, those deposits are not going to be in line with his weekly, bi-weekly, or semi-monthly payroll. Okay.
Mm-hmm.
FHA just changed their guidelines. What's the FHA guidelines for gift donors now? For currently, all you need to show is proof of the wire confirmation and a donor's gift letter. Okay, which is very simple. Let's say Marvin's my brother. I, Francisco Pugliese, gift these funds of $30,000 to Marvin Ordonez for his home purchase. And all I need to show is proof of the wire confirmation. So they need to find someone de mucha confianza with a lot of confidence, where they can
Right.
deposit that money slowly into their account, and then just send just one large wire with the gift letter, and that's the best way to source those assets. And
You,
back in the days, until about, I would say like maybe 2 months, maybe under 2 months ago, FHA would require you to show the donor's bank statement, not conventional FHA, but they just changed that guideline. So this is a great situation for your borrower to take advantage of that new FHA gift sourcing guideline.
But Francisco, the loan they gave him is conventional, it's not FHA.
Okay, FHA and conventional loans, I'm sorry for not clarifying that clear enough. FHA and conventional loans both have the same gift guidelines.
Oh,
So,
okay.
yeah, so all we need is proof of the wire confirmation and a donor's gift letter. And
Oh,
with that, we're
perfect.
going to be to go. Now,
And
here's the thing to be
yes,
careful of. I'm sorry to interrupt you. Here's the thing to
yes.
be careful of. It's very important that you tell your loan officer to run the DU approval with a gift. Because
Okay.
sometimes if it's the type file, or maybe let's say, for example, the credit is not the strongest or the debt to income ratio is a little tight, DU might not like the file with a gift, and it might want the borrower slash buyer to have their own funds. So sometimes
Mm,
if it's too tight, DU may not approve it with a gift. DU's been
oh,
very sensitive lately and it's gotten very smart. So it's very important that you tell your loan officer, hey, make sure you run it with a gift.
okay, sounds good. Thank you so much. I'll keep it in mind.
Absolutely.
That was very useful. Thank you.
Of course.
Yeah. Chris, you just said something? Don't be shy, unmute yourself.
Question, DU is only for FHA, correct?
Sorry?
No, so that's actually a very good question. Explain that again. Say that again so everybody can hear you.
Is the DU, it's only for FHA? I thought it was the LP for convention and DU for FHA.
Good question. So DU is for both LP and DU. So what is DU? DU stands for Desktop Underwriting Analysis. Okay. We have a lot of realtors and a lot of listing agents that ask for a DU for a bank statement loan. Marvin, is there a DU for a bank statement loan?
I don't know.
The answer is no. So
No.
DUs only apply for your Fannie Mae, Freddie Mac, and Ginnie Mae loans. Let me elaborate a little bit more on that. What are your Ginnie Mae loans? Your Ginnie Mae loans are your government-backed loans. So your FHAs, your VAs, your veteran loans, and your USDAs, your agricultural loans, which we don't see a lot of those here. More, no. Okay. DU is also going to apply for your conventional loans that are backed by Fannie Mae and Freddie Mac. So Fannie Mae and Freddie Mac are also your DU approved loans. So DU for Fannie is for Fannie Mae, LP, which is loan processing advisor, is for Freddie Mac. So it's just this different kind of it's the Freddie Mac approval. It's called LP, which is basically a DU, just in a different format. So DUs only apply for conventional FHA, USDA, and VA loans. Your non-QM loans and your jumbo loans do not have a DU approval. Was I able to answer?
You had a question, Chris?
Hi, yes, sorry, I'm going between screens. I was just asking if you could repeat that part where you were saying to make sure that we let our lender know just what you were talking about just now, just so I can get that down some about making sure that they have proof of the wire confirmation and the gift letter. You were saying just to make sure.
To pretty much make sure, Frank, that I think what she's requesting is to repeat the scenario of letting the lender know to run the DU, making sure that they already have with the gift.
That it's inputting as a gift, yes. So a loan officer can manipulate a DU for whatever they want it to be. You can put that somebody has $500,000 in assets in a savings account and they make $50,000 a month. Obviously, that's not necessarily true. So when the file gets to underwriting, we may have issues in underwriting. So that's why it's very important to make sure that the loan officer is actually running the DU, the desktop underwriting approval system, with the assets being given to the buyer slash borrower as a gift. Meaning that I'm giving Marvin the gift for the $30,000. So on the DU and the assets part of your 1003, you're not going to put checkings or savings account. You're going to put it as a gift. It's on the bottom. You're going to put gift $30,000. Depending on the credit profile of the client, DU may or may not like it as a gift, because obviously you got to think with the risk analysis of a bank. Somebody that doesn't have the best credit, their debt to income ratio is tight, they have a lot of debt, and they don't even have their own money that they can prove that they can't pay their down payment or closing costs. So they're borrowing money, so they're gonna have to return that money probably. How am I gonna, as a put yourself, let's say you're a bank, you're lending your own money. Would you feel comfortable lending your money to somebody that has a lot of debt? Their debt to income ratio is tight, doesn't have the best credit, they don't have their own money, but then now they have to repay the person they're borrowing the money from, plus pay their monthly mortgage. So that's kind of how DU takes the analysis for the risk. So that's why it's very important to be very punctual, cross all our T's and dot all our I's when inputting everything into the DU approval system.
All right. All right, guys. So I'm gonna role play real quick as the realtor now, right? He did the lending. I'm gonna do it as a realtor now. I'm gonna role play with someone who wants to do it with me. You guys will be the buyer. You'll be the referral, and then I'll tell you exactly what I do, and then I pretty much I have a 3-point system that I do. Okay. The first one is bill report. Okay. Anytime you get an incoming lead coming, okay, because it's a lead, right? At the end of the day, it's a lead. You don't want to start getting to business right away. You want to build report first, find out where she, find out who referred her, and we'll role play now. The second thing is, the $1 million question that you always want to ask them is this your first time purchasing a home? Why? Because by asking that question, it's going to open so much conversation right after that, right? So pretty much, bill report, obviously ask that question during the conversation. Explain the process of the purchase of the home, and then book an appointment, whether it's through a lender or whether it's for you in person in an office. You got to meet that person 100%. Okay. Even if they don't want to start right now, just meet them in person and sit down with them and kind of guide them and make sure they meet you. Okay. So it's a little 3-point system that's what I always do, no matter who I'm dealing with. So go ahead, and somebody that wants to go ahead and role play with me, you guys will be the buyer. You just got referred to me. You gave me a call. I'm gonna answer that phone, and then we'll just start the conversation.
I want to buy a house.
Who's this? Hello, good morning.
Good morning. Good morning.
Good morning. Good morning. How are you? Who do I have the pleasure speaking with?
Nasahi.
Sorry, who?
Nasahi.
Oh, Natalia, how are you? How are you doing today? How may I help you? It's Marvin speaking.
Listen, a friend of mine recommended me you because he said that you're very good selling houses. I need to purchase a house, but I have a question.
Yes.
I only have 1 year with my income taxes, but I have been working previously as a housekeeper. I know everybody have told me that I cannot buy. I
Okay.
have saved my money, and I don't know. What do you think? You think I will qualify?
Natalia,
Can you tell me?
Natalia, question for you. Who referred you to me?
It was a guy in church. He said, "Oh, you can call this guy," because I was telling him that everybody denies me, and they say no, I can't because I only have I don't have a social security number.
What church do you go to, Natalia?
What was that?
What church do you go
What
to?
church? One by my house. They're Christian, and the pastor and a friend of mine said that you're very good by closing deals. Is that true?
I'm the best one in South Florida, that's for sure.
Okay. Okay.
No,
We'll
of
see.
course,
We'll
of course.
So you think I will be able to buy?
Natalia, the only thing I can tell you, whether you could buy it, whether you could today or you could tomorrow, will definitely get you in the right path for you to be able to buy soon. That's for sure. That's what I can guarantee you.
Yeah, but I really want to buy today.
Well,
I mean, this year. I don't want to wait no more. I really want to buy it right now because I heard the interest is low. I really want to buy it like this year.
Absolutely. I'm gonna do everything I can to my power to make sure that you'll be able to buy a house as soon as possible, whether it's yesterday or whether it's today. Let me ask you a question, Natalia. Is this your first time purchasing a home?
Yes.
Awesome. What do you know about about the process of purchasing a home?
No much, really.
Okay.
I don't know anything.
You have like 5 minutes I can explain to you very quick? Natalia?
Yes.
So do you have like 5 minutes I can explain to you very quick?
Sure. Go ahead.
Beautiful. Okay, perfect. So, and so Natalia, pretty much, so the first step for purchasing a home is the most important one. Why? Because we're sitting down with a bank or a loan officer. By any chance, do you happen to know one?
What is that? I don't know anything.
It's pretty much just getting a loan through a bank. Do you know
Oh,
anyone that works
okay.
for a bank? Any loan officers?
No.
Okay, don't worry. I have the
Can you
team. If you don't
recommend
know,
me one?
I definitely have the right team. But if you know anyone, I'm more than welcome to work with whoever you know, family members, cousins, anyone.
Okay. But
Okay.
I don't know anybody, but it will be good if you recommend me one.
Yeah,
Thank you.
absolutely. I got the perfect team for you. Now, that's the most important step, crucial step. Number one, why? Because at the end of the day, as when you're purchasing a house, you want to know two things. You want to know numbers. You want to know what the monthly cost is going to be and what your closing cost is going to be. So you know exactly if you're able to buy right now or we need to wait to get some funds. Okay, that'll be the first step. So the good news, once we're qualified, because soon you will have that pre-approval letter in front of your hands, whether it's today, whether it's in a month, whether it's in a year, you will have it soon, okay? So once we start that process, we start looking for properties. Okay, so once we start looking for a property and we go on the contract means that we send an offer and they accept an offer, okay? Once they accept an offer, there's critical guidelines to it, right? So pretty much when they accept an offer, we'll pretty much close within 30 days. Okay, are you currently renting right now?
Yes.
Are you
That's
in a
why I
lease
want
or
to
you're
buy a
month to
house
month? Are you in a lease or month to month?
on a lease.
So when is your lease?
I think it expires November.
Okay, so if we get on the contract tomorrow and we close in 30 days, are you okay with terminating the lease sooner or?
Yeah, I don't mind losing the deposit. I'd
Okay,
rather get
beautiful.
my own house.
Okay,
But
because
also, I heard that they're helping with for the first buyer. There's some programs that I can use. Did you know
absolutely. So
anything about it?
yeah, so there's a program called Hometown Hero that once we sit down with the bank, he's gonna explain to you way more thorough. But yeah, they're giving you they're giving you most of your closing costs. Now your down payment with most of your closing costs.
Okay, so they will give me the whole money, or how
Not
it
the whole
works?
money. They'll give you a portion of your closing costs, but I think that'll be a conversation once we sit down with the lender. He'll give you a thorough conversation towards that.
But why you don't know anything about it? I mean,
No, I do know, but I just rather I'd rather him tell you exactly. But I can tell you more or less exactly what he'll tell you. So pretty much you have a down payment. When you're purchasing a house, you have a down payment and you have closing costs. Correct? You with me?
right? Okay,
So pretty
okay,
much the closing costs, which will be, just so you have an understanding, when you're purchasing a house, this is just like an average, it's not like exact numbers, but it's usually 8 to 9% of the purchase price. Have you been looking at any homes right now through Zillow or Realtor.com or anything?
no,
No?
nowhere.
Okay, so let's just say,
No.
for example, the property's 300,000, right? You want to multiply that by 8.5 to 9%. That's going to be your closing costs and your down payment. Okay?
Okay, but do you know how much is gonna be my down payment? Because I
Your
cannot do more than 3,000.
Oh, more than 3,000. That's how much you have
Yeah.
saved right now. Okay. Well, we have to sit down with the only one that's going to give you that accurate number is going to be the finance. I won't be able to give you that number.
Oh, I was hoping that you will tell me how much it will be.
I would love to.
Okay.
I don't want to give you the wrong numbers because he has to run your credit and he has to do everything in order for us to be able to give you the exact numbers.
So, do you think I'm gonna be able to buy my house this year with you? Are you gonna make it happen?
Hey, that's the goal, Natalia. That's the goal. That's the only goal I have.
Okay, we'll see.
Okay. So pretty much once they accept an offer, so there's few steps within. The first thing we have to do is do a deposit. We have 3 days to make a deposit. Okay. So let's just say, Natalia, that your closing costs, down payment, and everything is $20,000. Let's just say, right? I'm just giving you a number. Okay. And we have a $5,000 deposit. Okay. When we make that initial deposit, which we have 3 days after they accept an offer, when we go to the closing table, how much we gotta give?
Oh, I don't know. I thought you were gonna tell me how. Are you
Natalie, come
talking
on.
to you talking to me? But I really don't know what you're saying. I don't know. I'm thinking,
Natalie,
are you sure you know what you're doing? Because I'm asking you, then you're sending me to somebody else.
no, don't worry, don't
I
worry.
don't
Hey,
know
don't worry.
if you're knowledgeable, but I
Don't
don't know.
worry,
So you're
Natalie.
speaking to me like
Natalie, look,
I don't know.
I always tell my buyers, if you don't have 1,000 questions, you should be a realtor working along with me. So I want you to ask every question. I want you to understand it completely. Okay? Okay, so pretty
Okay.
much we have 3 days to make, once they accept an offer, we have 3 days to make a deposit. You hear me?
Yes.
Okay, so
Okay.
we're putting a deposit, let's just say for numbers, $5,000. Okay? If the lender tells us that your closing cost is $20,000 and we put a deposit of 5,000, how much more do we gotta give once we go to closing costs? Yes?
Yes.
Come on, Nata, yeah, I know you're a smart individual. 20,000 minus 5,000, how much would that be?
I don't know. I don't have a calculator with me right now.
Okay, beautiful. Don't worry.
But
So it'll be $15,000, right? So pretty much what I'm just trying to explain that whatever we deposit we will do will be deducted to the closing costs. Okay?
but
Now,
my
once we make
monthly
that,
payment's gonna be 3,000 though, right?
no. We don't know where your down payment, where your closing costs and your monthly payment will be until we sit down with the lender and he reviews all our documents.
Yeah, but I think you could tell me roughly how much it will be because I don't want to waste your time. I don't want to waste my time.
Let me ask you something, Natalia. What do you feel comfortable paying for monthly?
I could do right now. I'm paying 3,800. I will do up to 4,000
Okay,
monthly.
well, Natalia, the great news is that if you want to pay $4,000, $3,800, whatever the monthly cost might be, what we do like what we call it like a reverse engineering. So if you want to pay that, the lender will qualify you exactly for what you will be paying for that type of mortgage. So
Okay.
don't you worry. So at the end of the day, you're the one that's gonna make the decision of what you're gonna be paying, not the lender. Okay? If you want to
Okay,
pay,
but I'm sorry. I don't want notobody to run my credit.
you don't want
Okay.
your credit. So
No, I don't want nobody to run my
let me
credit.
ask you that. I totally understand. I totally understand. So let me ask you something. What's your objective here, Natalia? Do you want to purchase a house today or you want to purchase a house next year?
But that's gonna hurt my credit.
So
I don't want nobody to run my credit.
So how would you consider purchasing a house if you're not letting the lender run your credit?
But can they tell me before they run my credit?
Softball.
So what we could do is we could give you a pre-approval, but once it's time for you to purchase a house, no lender's gonna accept an offer without a DU, them verifying your assets and your credit and everything. So I don't think that's something smart that you want to do as well, because you don't want to get into contract and then get discouraged and then you find out that we have more debts or income or maybe you could have qualified for more or vice versa. So we want to make sure that everything's accurate. And in order to have accurate information through a lender, they have to run your credit. Now, if you don't want your credit, I totally understand that, and that's something that we can just regardless, we can meet. So you can meet me in person. Maybe you just don't trust me at this point, which is totally understandable. We can
No,
definitely,
I don't.
you could definitely, no, I totally understand. And I don't expect you to. So, once you get to meet me, I know you're going to love me. And as someone referred you from church, I'm pretty sure they referred you for a reason.
Okay. Thank you, Marvin.
No worries, Natalia. So the next thing we're doing, Natalia, is we're doing an inspection. Okay? When we do an inspection, every property that we're purchasing, Natalia, is gonna have cosmetic issues. Every property. It's not even brand new construction properties, always you're gonna find something, right? But we're looking for four main things. We pretty much AC, electrical, plumbing, and roofing, those are the main things. Why? Because those are the most expensive repairs. You with me?
Yes.
Okay, beautiful. Right after that, pretty much the next step after the inspection is pretty much the bank, whoever you choose to work with for the bank, they will send an appraisal. Do you know what an appraisal is?
No. What is that?
Pretty much an appraisal is they send an inspector to evaluate the property, right? So let's just say they'll go send an inspector, they'll run comparables of houses that have sold in the last 180 days. and they'll compare it and be like, okay, this house is worth 400,000, and that's exactly what the bank will lend you. They will not lend you a dollar more.
Okay,
with me?
who's paying for that? Who's paying for that? I'm not paying for that.
Well, don't worry. Once we get down with the lender, we'll talk all those numbers with you.
Okay.
Natalie, did you go to church today, Natalie? You gotta take me to church.
Yes, I will. When
I
do you
love it,
want
I
to
love
go?
it. We're gonna go to church together. I like your vibe. I like your vibe. All right, so perfect. Let's do. Okay, so pretty much after the appraisal, what the title company, what they do, they do a lien search in the property to make sure your property is free and clear. Okay, after the property is free and clear, pretty much what we do is before the day you get the close, before you get the keys, we do a final walkthrough to make sure, which is a final walkthrough is a final inspection to make you and I will go to make sure that the property is in the same conditions it is when we did the first inspection. You follow me?
Okay.
And then the best day after is you get your keys, we take pictures, we go to church together, and we'll have dinner. What do you think?
Oh, sounds great. You paying for it, right?
I'll pay for the dinner. I'm not paying for anything else.
Okay, deal.
All right. So let me ask you something. Are you available weekdays or weekends so we can meet in person? So you can, I want you to be able to meet me in
I
person
can do evening, and it have to be after church.
after church. Perfect. It's better. You're gonna be in great spirit. What day is that?
That will be Sunday as after 7.
7 p.m. or 7 a.m.?
7 p.m.
Oh, okay. 7 p.m. Okay, perfect. Let me do something. Let me make sure that my finance lender I'm pretty sure he will make an exception for you because you look like you're very eager to purchase a house. I'll see if he can go ahead and do that. And if he says yes, I'll go ahead and confirm with you. How does that sound, Natahi?
That's good. Thank you. Let
Hey,
me know,
Natahi,
please.
I want you to do me a favor. Whenever you see the person that referred me, please have him text me or call me and tell him I say thank you.
Okay, I'll let the guy know. Thank
See
you
you
again,
soon. I'll
Marvin.
give you a call soon. No problem. Thank you, Natahi.
Thank you. I'll see you Sunday.
Perfect. Bring that
Guys, so
heat.
that's a very, very good scenario and a very good way how Marvin reacted because you guys as realtors, you never want to give information that you're not gonna be able to take back or incorrect information that doesn't apply to the lending guidelines. So, for example, here it's a very, very good example. She's only been self-employed for 1 year as a cleaning company, but previously she was already in the same line of work as a W-2 employee as a cleaning lady. So in this case, yes, she would be able to purchase with just 1 year's taxes as long as the company has been open for at least 12 months or she's been a Schedule C self-employed sole proprietor for at least 12 months, that we can prove that with a CPA letter. So that's why it's very important. Never, never, never to overpromise. So great job, Marvin.
Thank you. Does anybody have any
Wait,
questions?
yeah, I have a question. So I thought they would say that you need 2 years of tax return. If she only did 1 year, if she only did
It's a good
one
one.
year, how is she's able to get qualified?
Because if you're self-employed and you're just starting a business, yes, you usually need 2 years. But let's say I'm an inspector for MIA inspections. Okay, I'm a W-2 inspector. I get paid on my W-2. I get paid on the payroll. I have 2 years W-2s with MIA inspections. Now I decide to go on my own and open up Frank Inspections. Frank Inspections opens up today, August 7th, 2024. Okay, I'm gonna do my taxes in January of next year. So on your 1120S return, on your 1065 return, it's gonna say the day that the company was incorporated. So I'll be able to buy August 7th, 2025, using Frank Inspections first year taxes. So every scenario is completely different. That's why it's very, very important just to basically get the buyer on a phone call with us on an introductory phone call, just to basically pre-screen the buyer. But the most important thing is face-to-face contact. There's nothing like face-to-face contact and meeting with the buyer to establish that trust, to establish that rapport, to establish that relationship. But that's a very good question. Every situation is completely different. But yes, usually you need 2 years of employment history is the most important thing. You need 2 years of employment history. Like right now, I have a scenario where the gentleman has an e-commerce company. He opened his e-commerce company in January of 2023. And we're doing 1 year taxes because before that he had another company called JDJ, which was open for over 2 years, another e-commerce company. They had 3 partners. Well, they got in a fallout with one of the partners, so now it's only 2 partners. So they opened up a new company in January 2023. Well, you're still in the same line of work. So every scenario is completely different. Not one case is similar to the previous case.
Does any,
I have a question. Oh,
Yeah.
sorry.
no, go ahead.
I have a question. If you bought before as a first time homeowner, how are you able to buy again as a first time? Another, like say like you bought and it's been 3 years that you bought and you want to buy again, but you want to do the first time home buyer. How a client is able to do that situation?
So good question. You wouldn't be a first-time home buyer. You would just be buying another primary residence. So if you already you bought one property already and you want to buy another primary, you're gonna depart this primary with a lease. So we're gonna rent this property out with a lease. We're gonna show a lease. We're gonna show the deposit for the lease already deposited into your bank account being the buyer, and then you're departing your primary residence to buy another primary so you can purchase this one, which is 5% down.
Do I have to put the first primary in an LLC or I could just leave it as
No,
like as is?
Yeah, you
no,
leave
you're
it
gonna
as
leave
is.
it. You're gonna leave it as is under your primary name.
The property has to be bigger than the first one you purchased, and you could be able to
Correct.
literally
So
say.
the second property got to be bigger than the first property.
Yeah, so let's just say the first property you bought an apartment, you could buy a second home primary, buying a townhouse. Let's just say a year and a half later, you buy another primary home, a single family home. You pretty much, you gotta convince the bank that you can't tell the bank that you bought a single family home and now you're buying a condo primary, because it's just not
Or a
gonna.
or a duplex, for example, because how are you gonna
But
justify to a bank that you're moving out of a single family home to a 2 or 3 unit home, that you have tenants, that you're sharing a backyard, and and you're living in a way smaller home. So it either has to be an upgrade of a home, a bigger home, number one. Number two, unless your job moved you, so it has to be closer to work, school, or your daily commute. So it's just got to make sense altogether.
so you can't. What if my family downsize? I won't be able to do that. Like if the client family downsize, like kids went to college, they had a big house. Kids went to college. There's no point of having a big house, and they wanna downsize.
Yeah, you
That
can
won't work
definitely
either.
no, you can definitely do that, but it just has to make sense. Like for example, um, you're not going to buy a primary residence in January, a huge primary residence, and then all of a sudden in June you're going to say you want to downsize. That's just a sign that you can't afford the mortgage basically, and you're trying to rent it out. So that won't get approved. But let's say you buy something, let's say you raise your family, I don't know, in the beautiful neighborhood of Westchester, right by FIU, and then now all of a sudden, kids are off to college. You know, you have this 4 bedroom, 3 bathroom house. Um, you're alone and now you want to move to a condo on the beach, that's perfectly justifiable.
Okay, thank you.
We had a question. What about from multifamily? Let's just say a multifamily to a triplex.
What about moving from a
From a
elaborate on that?
duplex
I'm
to a
sorry.
triplex. Let's just say you buy a duplex as primary, and then you buy a triplex. Can you buy the primary, or that's gonna be like
Mm,
a red flag?
no. That's a big no. That's clearly an investment property. So the way to do it, the way to do it is you would want to get your triplex first. Okay. You need to wait a year. That's the FHA guideline. You need to wait 12 months occupying the property. And then after that triplex, you can move into a duplex. You're moving into a bigger property, with 5% down. Back in the days, conventional Fannie Mae and Freddie Mac multifamily properties required 25% down until I believe last year. I think they changed the guideline early last year. So now you can just move in with just 5% down. So yes, you can move in from 4 units or 3 units to 2 units, most definitely because you're upgrading, you're upsizing. But you can never ever, I mean, think about guys, you gotta think about as if you're at the bank. Would you believe that if you lived in a 2 unit property, now you want to move to a 4 unit property, that person is actually going to occupy that 4 unit property? Or would you think that they're going to actually rent it out?
I have a question.
Yes.
Yes.
What if you've had a multifamily for over 20 years? It was your primary residence, and you want to purchase, say, another multifamily or like a three family or something.
Okay, so is the original multifamily you have a 2, 3, or 4 unit property?
Two,
Okay, and then you want to purchase a 2 or 3 or 4 unit property now.
2 to 4.
Okay, so if you're gonna purchase a 4 unit property as a primary and you're already living in a 2, chances are, unless it's, let's say, I don't know, you live in a multifamily property, you live in a homestead, and all of a sudden you're a nurse and you get moved to Palmetto Hospital all the way in Hialeah. You might be able to get away with that, yes, because now you can show your W-2s and your pay stubs in Palmetto Hospital in Hialeah, and you can show your primary residence is all the way down south in Homestead, and obviously you could justify that the daily commute from Hialeah I'm sorry, from Homestead to Palmetto Hospital is over an hour each day. That's also the importance of working with a local lender that's headquartered here that knows the Miami market.
I have one caveat. What if the person's sole income comes from that two-family property? They have no other income.
Then you need to declare it on what's called the Schedule E of your taxes. So to be able to just carry that single income to qualify for another multifamily property, it's going to be very, very hard unless they have that property split up in 15 different ways and they need to declare it on their Schedule E of their taxes. The Schedule E is the rent schedule of the taxes properties owned.
Okay, thank you.
Well, guys, if you guys have any
Hi,
other
good morning. I have a quick
Morning.
question.
Of course, of course.
I'm just picking back off Chelsea question that she asked about like if you have a property and it's 3 years old for you to get another property as your primary resident, how would that work? I think it's probably have to do with how would you balance that as your primary, the second one that you're buying to get like a relief from the taxes and stuff?
And so how would you balance the second one as your primary residence when you already own a property? That was your question, correct?
Correct.
Okay, so we're gonna depart. This is the one you currently own. This is the one you're currently buying. Okay, so you're gonna depart this one here. You're gonna show you're departing this one with a lease. So you already have a tenant signing a lease. You already have a deposit. You're collecting first, last security. It's already deposited. So here you're already showing that you have a lease, first, last security. Okay, at the time of closing, your homestead exemption is gonna move from here to this one, to the new primary. Okay, so obviously, yes, your taxes will reassess here in the following year because you're transferring your homestead to the new primary. And then
Okay,
since
so
you're
it get
showing,
transferred over to the new property, so the other one doesn't have any homestead on it.
Correct.
yes, but this one here, since you're showing a lease, first, last, and security, you're gonna be able to exclude that monthly mortgage debt versus your debt to income ratios.
Okay, got it. Thank you.
Absolutely.
Hey, guys, if you guys
I have a
think that
question.
Okay, perfect. Before you finish, if you guys, before you guys leave or anything, if you guys can comment in the chats, if you guys have found this informational, please do so. I appreciate it. Go ahead, Jen.
Yeah, guys, so I'm gonna put my phone number here down in the bottom, guys. And if you have any questions in regards to financing, any doubts, concerns, I work 7 days a week, no wife, no kids. I'm 24 years old. You can reach out to me at whatever time. I'm always here to be of service. So I think I cut
Awesome,
somebody
thank
off. I'm sorry.
No, that's okay. Question. Back to that cash deposit. Could that person just say they have an income of 5,000 a month and that 30,000 that she was talking about, if they deposited like $2,000 in the account, I can't remember if you said one time or twice, but if they deposited 2,000 and that's less than the 50%, would they be able to put like 2,000 down or in the bank and then another 2,000 the next month
That's a very
to
good
kind of
question.
offset the gift so it doesn't look
That-
like
That's a very good question. If you're a W-2 employee, you're gonna need more time to source that money because obviously, like I said, it's not in line with your payroll, whether your payroll company is ADP, Regis, however your employer pays you, that's gonna be incoming into your bank statements. So obviously, cash is not the traditional form of payment when you're W-2 employed. However, that is still the guideline. But when you're self-employed, you can justify and say that customers paid you in cash. So the guideline is one single deposit in one day cannot be more than 50% of your monthly income. So if you're self-employed, okay, and your monthly income is $5,000 that we calculate during your pre-approval, okay, one single deposit in one single day cannot be more than $2,500. So to be safe, you don't want to pass really $2,100 to $2,000. So let's say today you deposit $2,000, tomorrow Thursday you deposit $2,200, Friday you deposit $2,300, Saturday you deposit $1,900, like that to really spread out the deposits. But if you're a W-2 employee, yeah, definitely we'll need to get creative and see exactly
Let
how
me
to
ask
do
you
it.
something, Francisco. Let's just say, for example, I am a W-2 employee. I have $30,000 in my bank account and behind under my mattress. Can I deposit $3,000 every month, every 3 days, right? To make the $30,000. Let's just say, right? I'm just hypothetically speaking, right? We don't show you because all you need for my W-2 is my last two or last bank statement.
So for FHA, you only need your last 30 days bank statements. So that's why
Okay,
it's very important to do a thorough pre-approval.
So what if let's say, for example, we sit down, I don't have all the money, I'm W-2, I don't have nobody to give me a gift. Is it okay if I put $2,000 every 3-4 days until I reach the 30 days until I reach the $30,000, correct? We don't obviously can't purchase anything. What if the next month the money is already reflecting my bank statement somehow, some way in my savings account? Can we start looking for a property?
Yes, so if that's, I mean, every scenario is different, and those that have worked with me before know that I'm not shy of taking on a difficult transaction. I think Dogmatic can attest to that. You know, it wasn't a smooth ride, but it was a very hard one, and we got it closed. Where if there's a will, there's a way. Obviously, the best way to do these things is to prepare before going into contracts. Okay, obviously things do happen when you're on the contract, and for the best way to do this would be to deposit the money if the buyer's not in a huge rush. That's why a pre-approval or a buyer's consultation is so important, just to see where that buyer stands and how we would prepare them. So the best thing to do would be to deposit that money and then wait for the following month's bank statement to generate. And then right there, you have no letters of explanations, you have no sourcing of large deposits, you have none of that. You just wait for one clean bank statement to generate. And once that money's in the bank, we're more than good to go.
I have a question.
Creative finance.
I have a buyer that has a rental income. Do you take that in consideration? Is work self-employment?
Yes, so rental income, it needs to be declared on the Schedule E of the taxes. So as long as it's declared on the taxes, we can use that as qualifying income 100%.
One
And
last
what if-
question.
Oh,
I'm sorry. Were you done? I don't want to interrupt.
That's okay. You can go first. I'll wait.
And the new realtors that are coming on board and they're looking to get into purchasing, do you have any advice for them, especially if real estate is their sole income and they're not making a lot right now and they don't have a W-2?
Yes, most definitely. Number one, save your money. Don't waste it. Save it for a rainy day. First and foremost, okay. Number two is you should definitely open a PA or a corporation. So you should definitely advise with an accountant. And for real estate, it's a little bit different. I gave the scenario earlier in regards to the cleaning lady that she only needs 1 year taxes. Real estate, you're gonna need 2 years taxes because you can't be a W-2 employee selling real estate. So, and the underwriter is gonna look at on the DVPR, 1 year real estate license was acquired. So they're gonna make sure that it's the full 2 years. Okay, so it's also very, very important to file your taxes correctly in order to buy a home. A lot of tax preparers and CPAs will not file your taxes accordingly for the purpose of you not paying back money to the IRS. But there's things to work around it, like an IRS payment plan for 72 months, and things like that. So that's why it's always good to sit down with a loan officer like us to make sure that you're really prepared and structure your documents in the right manner before filing your taxes.
Awesome. Thank you.
No problem.
My question was, what if like you wanted to make a deposit and just say like you have a regular job and then somebody's like, oh, hey, I'll pay you, X amount of dollars to drive my car for me across the country and fly back. And I'm going to give you $3,000 to do it. How
So,
would that be?
so that's why it's so important to cover a 2-year employment history because number one, it shows discipline and consistency and the borrower having a 2-year employment history. So that way they could show the discipline that they have to be able to repay the debt of a mortgage. If they're flying, you said driving a truck or driving something across the country,
Yeah,
very
just
simple.
like out of the blue, so it's not their regular income.
If it's not their regular income, they would not be able to use it because if they only do it one-time thing, chances are you're not going to declare it on the taxes because I know it's an X amount of money you need to make in a certain line of work before you have to declare it on your taxes. I'm not an accountant, so I wouldn't be able to advise you on that. But I do
I
know
mean,
there's a certain.
big as showing a deposit, like an unusual deposit.
Well, yeah, an unusual deposit, you would be able to use it, but you'll be able to use it for down payment and closing costs. Okay, we just need to source it, but you would not be able to use it as qualifying income.
Thank you.
Absolutely.
I don't have a
I have.
question.
Oh,
I'm
sorry.
sorry, I don't have a question, but I wanted to thank you, Francisco, because I know the closing we did, it was crazy. I was very upset at the end. A lot of personal issues. I lost my aunt and everything. So I want to thank you because even though there was it was very troubled. I don't know how we made it. Between Diosito was like really tired of my prayers, like every day. He was just tired. But I want to thank you. I wanted to do it in person out here in the open. And the proof of that is that I'm trying to give you more buyers. It's just that they're just horrible because, oh my God, and then one miracles. But I want to thank you for your time. I want to thank you for everything that, that you did. And like I said, I was very upset and you know that, but everything happened. I prefer to give birth 3 more times than that closing, but you guys made it happen. And I really wanted to thank you out in the open, not just,
Thank you. Thank you.
Thank
Thank you. It means a lot.
Thank you, guys. Well, guys, I hope you guys had, anybody have any more questions? I hope this training was really good. I know this is very important because I feel like a lot of agents sometimes have the opportunity. They're just scared to approach any buyer or any person because they don't know what to ask and they don't know how to defend themselves with any questions, right? So at the end of the day, once you feel confident enough, and this training here will give you at least that confidence, so you kind of know what questions are they gonna either be asked by the person next to you, or you know what questions to ask them. So guys, thank you. If you guys really like the training, please on the lifestyle chat, just right there, so that we could be doing more trainings like these, and then we know what trainings you guys will benefit from.
Yeah,
Love
guys,
you
and it's
guys.
also very important. Also, feel free to call me at any time if you want to role play with me as a buyer lender. I'm always here to be of help. It's the only way that we're gonna get better. It's the only way that we're gonna really gain that confidence to talk to buyers. Just shoot me a text, hey Frank, in the next day or two, can you think you take 10 minutes to role play with me as a buyer and lender, or Marvin or whatever, and we're always here to be of help. So however we can be of support, you have our guaranteed 100% support here.
Yeah, so we work with Columbus Capital. I know you guys see us all over in the chat. So thank you guys. Love you. I hope you have an amazing week.